Okay, let's go ahead and get into the stock market technical analysis. I'm going to go through the broad market charts. We'll look at a couple trade ideas. Forgive me if I'm talking a little funny. I just got back from the dentist, had a little Novocaine. All right, so we triple Qs. We have, clearly we've broken out to a new high recently on the daily chart from this previous trading range. There's your new high. We are starting to put in that negative divergence, though. You can see here on the PPO, let me kind of zoom in, starting to turn down, and that's keeping the divergence intact. So again, this looks to me like this high that we saw, the breakout, is going to get sold into, and it's going to be, a false breakout essentially, and we're going to make that next leg lower. Now what you'd want to see though to help confirm that, a couple things. One, PPO, you want to see that start to turn down, see a bearish PPO crossover to help confirm the divergence. And then two, a break really back below 448.50, because that's the top of the zone. That was resistance, so that is where the bulls should be fighting it out, trying to hold that support. Okay, so if you see that fail and you break back below, then that's going to signal a false breakout. So that's a big level to watch for, and that's really all I see right now on the triple Qs. We obviously have Nvidia trading, reporting earnings tonight. Here's Nvidia. If I go to the daily chart, actually I have to narrow it down to the hourly, but on the hourly you can see they're starting to sell into it now. You've got support. There's a reaction. There's one starting to break down. The only problem is that earnings is coming out. So to take a breakdown right before earnings is just, I prefer to step aside and just wait and see how earnings reports, and then we can see how this thing trades. And so that's what I'm looking at on Nvidia. And that's really it. The rest of the FANGs and Mag 7s don't matter necessarily today because it's all based on Nvidia earnings. So I'm going to move on. Okay, we'll just go into some broad trade ideas. All right, home builders, PHM. Again, you can see here, there's a lot going on here, but in general, you've got a bearish rising wedge. You've got negative divergence, all right, showing up, boom, and really just continuing, all right. So look, there's your former high. They spiked this thing up, made basically a one-day new high, run a bunch of stops, and this is what I talked about, where I thought this was likely a stop raid, and then boom, sold off. Here's your trend line, broke trend, and we're selling down 3.5% today, and very likely moving a lot lower. We're kind of at support. There's a gap right here. You can see this little gap. So I think, they'll probably hold it here for today, maybe a small bounce. But in general, this looks like where, okay, so maybe a bounce, and then I think we head lower. All right, so that's it on PHM. Again, I still have the target down here at 99.80. All right, that's the widest part of the wedge pattern that this was in. You take it to the point of the breakdown, it's really actually lower, basically. It's actually down to the 200-day moving average, but we have good support there at 99.80. So, and the 200's moving up. So I think, if we're going to drop, we'll probably approach that key level of support and the 200 about the same time. And that's where I think we're going to probably hold. That's where I'd look to cover a short trade. So that one still looks good. Abercrombie & Fitch, ANF. Again, this one, I think it's going to break on earnings, which comes out next week. But in general, negative divergence, it remains intact. You can see the RSI starting to turn back down. We made a new high in price, so they pushed it up to make a new marginal high. It's a divergent high as of right now. And again, I think we're going to break down on earnings. Probably a good size breakdown coming up on earnings. So it might even break down before. I suspect they'll probably start to break down and just kind of hold it in the area, and then earnings will come out and this thing will gap down. So that's what I'm looking for on that one. General Motors, talked about this one I've been talking about it for a while, but in general, bearish rising wedge, breakdown, back test, big impulsive rejection right there, and a outside day bearish engulfing candle. So you treat those as tops, right? And so that's why I marked out this line here, because I said that's the bearish engulfing, that's the top. And sure enough, look, they tested this thing for weeks, really going back, basically a month. They tested that high, and then boom, we're getting rejected, starting to sell down. So little gap right here. maybe a small bounce there. But in general, I think the top is in on this one. And we tested the top for over a month. So this thing doesn't really have much business going back up to the top. And, if it goes back up there, you're probably going to pop that top. So, yeah, this one looks like it's heading lower. Minimum target, there's a gap to fill in the 200. I like that target. It's about 35.50 or so. So that's where I see this thing heading, which is another, about 18.5% down to that target. Looks good. Negative divergence. And again, look at the top. All right, they're trading the top here, but the momentum's just dropping off. So, yeah, that's what that one's telling me. Down we go. JP Morgan, the biggest thing that I'm really looking at, you have the negative divergence that remains, but you can see this little pattern here on the daily chart. They held this support line, ran it up into resistance, big rejection candle, broke that trend line on that rejection candle, and they've just been back testing it from underneath. So it looks like it's bear flagging, move down, flag up, and then another impulsive move down. So probably going to come fill this gap around 189-ish. Okay, so that to me looks like it's continuing lower, and we are, heading lower. Now it could continue to backtest. That we might just continue to grind along this trend line. If the market breaks down though, and especially if Nvidia reports bad earnings, then this should continue lower. I'm seeing a breakdown and some signs of sell signals in the metals today. This is copper. This is the copper ETN, tracking the price of the metal futures. But you can see big gap down and big sell signal there on copper. If you flip over to like the largest copper miner, or I think they're one of the largest, Freeport-McMoran, FCX, you can see here on the daily chart. Look at that negative divergence. Boom, there it is. A nice clean up trend line to watch. Several reactions, support, and then a gap down, and that's a sell signal. All right, as long as they can't recover that, and it's pretty far down there, I doubt they're going to be able to, but that's a sell signal all day long. So seeing breakdowns there, and then if I flip over to like the gold miners, look at the gold miners. My chart here, I've got a bunch of miners. They're all down, pretty sizable. The gold miners have been up pretty huge recently. They're all, selling down hard today all at once. I did point out some individual mining trade ideas in the private member group. So if you're interested in getting some of those private trading ideas, trading setups, then feel free to join up on the private member group, because we're covering, lots of additional market ideas and trades in that group. Link in the description below on that one. And then there's also a agricultural play that I pointed out. I'm going to keep it for the private member group as well, but that one's working out nicely so far too. Back to the miners though, here's GDX. The gold miners, you can see on GDX, clear negative divergence, indicating that we are likely going to have a correction at least. Support all along here, and you can see just starting to crack support. That's not clean enough for me to say that has that's a sell signal. I'd like to see some more selling from here, because we have an hour left. I could see them stepping in and popping and kind of holding that support, but it's very close, okay? And some of these individual miners are actually triggering sell signals, so keep an eye on that. But I think miners are going to come in for a correction. NTR, this is an agricultural play. Talked about this one for a while. Still looks good, still long. You can see here, we basically had this big bearish rising wedge, pointed it out. Breakout, back test, running uptrend. There's kind of a trend right here, and we're just kind of holding that bullish trend. So continuing higher most likely. I don't see any signs of a pullback right now on this one. I think we're going to go up. Here's an actionable trade idea. Affirm, you can see here, you've got this uptrend line, support, kind of a little cluster right through here. Breaking today though, breaking that support. Unless they can step in and buy this thing at the end of the day, into the close, we're down 7%. We're taking out the 200-day moving average as well. And it just looks to me like we are going to continue lower. There's some support right down here. So next level of support's about 25-ish. So I'd put good odds that we head down there from current levels. It's about a 16% drop down to that level, and then quite possibly lower. But in general, there's a setup. I'm not going to take it because Affirm's down quite a bit already. It's been clearly trending lower, and maybe this thing goes bankrupt. But I prefer to find stocks that are way up and they're about to turn versus ones that are way down. Down quite a bit. Although it has rallied off the lows, quite a bit. So, okay, I have one private member and subscriber asking me to do Tesla constantly, so I can't cover it every day because I don't see anything that's radically changed, but I'll kind of go through it. Here is the downtrend line on the daily, all right? We broke up, gapped up. They're fading that right now. So at this point, I think that's probably the end of the fade, but it's really going to depend on Nvidia. If Nvidia is going to rally, this thing could have another leg up. I've got resistance right up here at about 206, the 200 days up there, and I have support pretty much right down in this area. All right, a good support down around 147-ish, and we're right smack in the middle. So it's not a favorable chart to take really any type of position, long or short, because you're just right in the middle. It could go up, could go down. If I had to lean one way, I'd say probably down because I think the market's going to correct given that triple Q's negative divergence. I think we do this maybe. But again, risk reward is not a good trade to take in my book. So that's what I have on that one. And Microsoft, they also wanted me to cover that. You can see Microsoft looks just like the triple Q's, which makes sense because it's one of the largest. It's the largest, I believe, in the triple Q's. Divergent high. You can see negative divergence. RSI starting to turn down. PPO is still pointed up, so those will need to turn down to help confirm the divergence. But in general, it's a divergent high. Bulls will be wanting to step in, trying to hold these highs. I don't see a sell signal yet, divergence isn't a reason to short. So we could go a little higher. All right, that's completely possible, or we might stop here. I need to see a sell signal, and so until I see the sell signal, I would just, this could kind of hold up, all right, and probably continue to grind higher. That sell signal might come tomorrow, it might come any day now. The divergences are still there, so when the divergences are there, it tells me to look for a sell signal, but I just don't see it yet. And again, nothing has changed in the bond market. Here's TLT. You can see clearly resistance, 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 and we're still holding in that area. So as long as we're holding resistance, I see rates going higher, okay? And, because as long as we hold resistance, this should continue, this should get rejected. Rates will go higher. We should see the markets come lower. If we pop up and break resistance, then that's a change, or rates will be falling at that point. And we'll want to understand why rates are falling. Because again, in the past, and I'll just pull this chart up here. This is the Fed interest rates, and it's also showing the recessions for going back to 1950. The gray bars in the chart are the recessions. And what you'll see is, rates, they rise, we enter a recession, and then rates, this is unemployment rate. Let me find the rate chart. Here it is. Sorry, they're kind of similar in general, but you can see this is the interest rates, and you can see interest rates are always falling, and then the recession shows up. So, and typically recessions are declared in hindsight. So what you'll see is rates rise, and then rates start to fall, and then you've got a recession. Rates rise here, rates start to fall, then you have a recession. So by the time the rates are actually falling, you're very likely in recession, and then they'll tell you, after the fact, because they always declare those recessions, after they've kind of already taken effect. We always see rates start to fall before the recession typically. And so it's not, going back to the chart, it's not necessarily a good thing to see this, TLT. If TLT breaks trend and interest rates start to fall, that could indicate that we're basically in recession. Okay, and I'm going to wrap up with this chart. This is the home builder ETF. I know I covered that individual home builder, but here's the ETF. And you can see here on the daily chart, this goes back to October 2023. Support. All right, we got some reactions here, and there is a sell signal. Okay, so unless they can recover this ETF and it rallies into the close, that's a break of trend and a sell signal on that home builder ETF. We did have negative divergence right here. All right, you can see it's just been building for a long time right there. And, you know, this market has continued to rally into that divergence. This is your last divergent high right there. And then they, you know, couldn't quite make a new high, and we've now broken trend. So sell signal on the home builders. All right, they look like a short to me for the next trend trade, essentially something that looks like maybe like this, but to the upside. So, you know, you've got support along the way. That looks like there's some support right about in here. Okay, oh, let me kind of extend that out. All right, looks like there's some support about 150, but in general, I'd say we, you know, hit that, maybe bounce, and then head down to the 200-day moving average. Looks like there's some support again right about right about there. A couple reactions there. The 200-day. All right, so that's where I'm seeing us heading on the home builders, down to the 200-day moving average, about 12-13% drop in aggregate. Okay, I'm going to wrap it up there, get the video out. You guys take care, and we'll see how NVIDIA earnings comes out. Best of luck.